All right, so there is a tweet out there from Car Dealership Guy that is getting a ton of attention. And what it says is that Capital One is going to start pulling their floor plans from dealers. And if this is true, this is terrible, terrible news for car dealers. See, car dealers need these lines of credit to be able to fund their inventory that they keep on their lots to be able to sell and make money. So now what is Capital One seeing? And probably a lot of other banks are seeing the same thing that are making them want to not give dealerships these lines of credit to be able to purchase more inventory. What they're seeing is that dealers are overexposed right now. They have paid way too much for their inventory, and now they are having a hard time selling it. Interest rates are up. The car loans and car payments are at the highest levels that we have ever seen them in history. Inflation is up. Everything costs more money. And guess what? It's starting to take a toll on these dealerships because they are having a hard time selling these cars. It is so much harder now than it has been in the last 2 years to get people approved for loans to be able to sell these vehicles. And you know what? The banks are seeing it. They know what's coming up. And that's why they are pulling out of these dealerships. That's why they're pulling these credit lines, because they do not want to get stuck holding the bag on these cars. Capital One is going to be the first of probably many financial institutions that are going to, at least at the very minimum, start tightening the strings on these dealerships, because too much greed, too much overpaying, just too much of this car market bubble has been going on for way too long, and somebody's going to get left holding the bag, and Capital One says, you know what? It's not going to be us. So we are shoring up. We are going to make sure we are not in bad products. And right now, a massively bad product in the car market are these dealer floor plans, because these dealers have been stupid. They have overpaid, and they have too much inventory right now. And guess what? Over the summer and then the rest of the year, they're going to have a real hard time selling through their inventory. And they're already underwater in a lot of the inventory that they have on their lots right now. So now, even if car prices were not going to crash, if the banks think that they're going to, it becomes a self-fulfilling prophecy. And the reason being is because the banks control all the money that go to these dealerships. So if they start pulling their credit lines, then that means there's less dealers that can actually buy inventory at these auctions. Less dealers having money means less bidders to run up prices at these wholesale auctions. Wholesale prices will crash if a lot of these banks start pulling their flooring lines, because dealers, they just can't afford to buy cars if they don't have credit. Many dealers need these credit lines to be able to purchase their inventory. So what I do know is that over the last 6 months to a year, flooring lines have gotten a lot tighter. I've heard examples of a lot of dealers going through this, and they have a flooring line that they might not use the maximum amount for. The case that I've heard is a dealer that has a $250,000 credit line, but they usually only use $100,000. So in this case, what's happening is these banks are seeing that this dealer typically only holds $100,000, but they have that extra $150,000 line of credit. What they're doing is they are cutting that $150,000 line of credit, because they're saying, okay, this dealer doesn't need it, and we don't want to expose ourselves to this dealer if they decide to go ahead and go get overexposed. And that's what we're seeing on a lot of these dealers, is they're actually they're tapping into more of their floor planning credit than they ever have before, because prices have been so high. And now, as you get to a time where dealers just can't sell as many cars, if there's a dealer that normally they'll buy 10 cars a week and they'll sell about 10 cars a week, if they get into that routine of knowing that they're going to go to the auctions and they're going to buy about 10 cars a week, now stuff slows down, and instead of selling 10 cars a week, they go through 3 weeks where they're a little bit slower, but they're still selling cars. They sell 8 cars in a week. So now they're still used to going and buying those 10 cars. So they're going to buy those 10 cars for the next 3 weeks. but they've only sold 8 a week. So you have a 2-car deficit every week that this dealer is not used to having. So they have 6 extra cars that they wouldn't normally have. And in that case, 6 cars can easily add up to $60,000 of extra credit that this bank does not want to be exposed to. So these banks are protecting themselves by cutting down these floor plans to not let these dealers get overexposed to where they can get themselves into trouble. The banks are fixing that for them by lowering their credit lines. So we know right now, because interest rates are up, it's harder for customers to get financed. So dealers are selling less cars right now. I've got a couple buddies that I talk to, I keep track of, that use floor plans. I don't use one, but I talk to other dealers that use them all the time. One particular dealer, he has actually been in business for the last 3 years, and he uses a floor plan, and he has told me that he has never, ever, ever had to pay any fees for keeping a car too long on his lot. But he's saying right now, because times are getting slower, it's harder to sell cars. He is now having to pay fees because his cars have sat so long without being able to sell them. He's never had to do it before. In the last 3 years of him being a dealer, he's having to do it right now because dealers cannot sell their vehicles right now. So one more thing that I have been seeing at these dealer auctions is that I've been seeing floor plan companies actually running some cars through these auctions. And I happen to know one of the floor plan reps at one of these auctions, and I went to her and said, hey, I see that you guys are actually running some cars through auction. What's going on? So what she actually told me is that if some of these dealers, if they're having cars 60, 90 days, and maybe they're getting a little bit behind on their payments, she will actually, the floor plan company will actually go to these dealers' lots, and they will take these cars that have been sitting too long, they'll take them to the auction and they'll run them through. What she said to me that they were doing is that they were helping them sell their cars. So here's the problem with that. When a floor plan company is going to go repo, you usually hear repo, a customer is can't make their payments, and they'll get it repoed from the dealer. This is actually happening to the dealers right now. Dealers are getting their cars repoed from the floor planning companies. So whenever these floor plan companies go and repo these cars and take them to the auction, they'll run them through, and these cars are going to bring substantially less than what the dealers paid for when they bought them. Because keep in mind, these dealers, they have a time frame to be able to sell these cars. So these cars have been on their lot for quite a bit of time. They've been on there 60, 90 days. And what do we know about 60 days ago, 90 days ago? Car prices were higher than what they are right now. Wholesale values are going down. We're seeing wholesale prices go down. So we know that these cars are going to bring less money than what the dealers paid for them 60 days, 90 days ago. So there's going to be a difference. And even so, with the floor plan company actually sending these cars to auction, just because the floor plan company is running them and they're not being ran by a franchise dealer, that means that they're going to bring less money in the lane. There's going to be less bidders that want to buy these cars because they know that they're not going to be the cream of the crop. They're cars that dealers couldn't sell in the first place. So if, just for an example, this $10,000 car that a dealer paid $10,000 for 60 days, 90 days ago, that car might only bring $5,000, $6,000 in lane right now. So what's got to happen is there has to be a difference that is paid, and that dealer that is on that floor plan has to pay that difference. And keep in mind, these dealers, they didn't have money to begin with. That's why they're borrowing this money. So if they can't come up with the difference, then their floor plans are going to get slashed. And if not, they might even lose their floor plan. And if a dealer loses their floor plan and their credit gets just absolutely hammered and they can't get another floor plan with a different company, they might as well just close up shop. They don't have any cash. How are they going to buy inventory? If you can't buy inventory, you can't sell your inventory. If you can't sell your inventory, you can't make money. Why are you in business? So they will close up shop if that happens to them. All right, so I know I talk about floor plans a lot on my channel. It's a big driver for the used car market. And I also know that we've grown a lot in the last month, 2 months, and I have a lot of new viewers and I have a lot of new subscribers. So I want to just tell you, for those of you that are new, what a floor plan is. So what a lot of people don't know is that dealers, they can't really afford, for the most part, can't afford to buy their inventory. They don't own any of the cars that they actually have on their lot. What they do is they do basically the same thing as swiping a credit card for every car that they purchase. And who holds this credit? These are the floor plan companies. And what this is called a floor plan. That's the dealer's line of credit to be able to purchase these vehicles. So when a dealer buys a vehicle at the auction, then they will go and pay for it. But when they pay for it, the auctions are hooked up with these floor plan companies. The dealer will say, okay, just put it on my floor plan, put it on Next Gear, put it on AFC. Those are two common floor plan companies that a lot of dealers will use. And is basically just them swiping their credit card, and they'll take that car back to their lot. And as soon as that car hits their lot, they actually start to accumulate interest over the days that they don't sell the vehicle. And a lot of times these interest payments will come due, these fees will come due at the 60-day mark, at the 90-day mark. And so as a dealer continues to keep a car and doesn't sell that and doesn't pay off that line of credit that they used to purchase this vehicle, their costs actually go up in the vehicle. So after 60 days, after 90 days, they will be paying more money on top of what they've already purchased this car to the floor planning company. And that's why it's so dangerous for dealers to actually use these floor plans, is because when we go through a slow time like we're about to experience, if a dealer has 10, 20, some dealers have floor plans that they have 100 cars on. If they go through a time period where they're not selling very many cars, these payments can absolutely rack up. Just in the case of just 10 cars, if a dealer has a floor plan that let's say they don't have the best of credit, so they could have floor plan payments of $500 to $1,000 per car that come up in a 90-day span. And if they have 10 of those cars, then that could be easily rack up to $5,000 to $10,000 in just floor plan payments that they have to pay out. And if they didn't have the available credit, if they didn't have the cash, the liquidity to begin with, then they have to start liquidating cars, and they have to liquidate them fast to be able to pay their flooring lines. Because like I said earlier, if they lose these flooring lines, they might as well not be in business. They don't have the cash to be able to buy more inventory, to be able to sell it, to make more money. So why even be in business? So the flooring lines, these banks are critical to the whole car market. And if they start getting tighter, and if they start pulling these floor plans from these dealers, this could be a scenario where they could crash the whole car market, because there's so many dealers that depend on this money that they're getting from these floor plan companies. I don't see that happening, because if there's a few companies that pull their floor lines, then these dealers a lot of times can just go find another company to be able to get flooring lines from. Where it will put a big strain is if their interest rates go higher, because these banks are trying to shore up a little bit and protect themselves. If their credit lines get cut down like we've started to see, that's going to create less bidders for these cars at the auctions. So that could really put a massive weight on used car prices just by cutting the available liquidity that these dealers are getting. But all banks are just not going to stop doing flooring. There's still going to be banks out there that are going to floor plan cars, even if it gets really, really, really bad. It's just that these banks that are going to lend money to dealers, they might become very predatory if they're going to do it. They might have crazy high interest rates. They might have crazy high fees, just because it's going to be so dangerous for these lending institutions to be able to give money to dealers, because the market's going to get so bad. So that's my worry as far as really hurting used car dealers and the car market, is the tightness of what the banks are going to put onto these dealers, and the available credit that they're going to allow the dealers to have. But if we start seeing more banks cutting available credit, if we start seeing more banks pull out of lending for used car dealers, it's going to have a big, big effect on the car market. All right, stupid thumbnail. Well, the only reason we got it is because we're at a children's museum today. So took my boy here, and my wife said, you know what? That'll be a good picture. So that's why you get the stupid thumbnail.